Hey listeners, today I hosted Sergej Kunz, the co-founder of 1inch. 1inch is a popular DEX aggregator in the Ethereum world that recently expanded to Solana. This is part of a recent wave of DEX aggregators launching on Solana, trying to challenge Jupiter, the current top dog in that sector. I was curious how 1inch managed to build a routing algorithm that can compete on Solana after coming from EVM land, where, at least on the Ethereum L1, blocks are created more slowly. We get into that and a bunch more, including 1inch's business ambitions. Let's get into it.
Permissionless 4 is right around the corner, June 24th to 26th in Brooklyn, New York. We're seeing new crypto applications cropping up all over the place right now, and this conference will be a place to get developers, investors, and founders all in the same place to have high-signal conversations about what crypto's future should look like. This one's for the memers, the dreamers, the builders, and the token lovers. Don't miss out. Plus, you can use the code Lightspeed10 for 10% off at checkout.
Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Sergej Kunz, co-founder of 1inch, a DEX aggregator that was popularized in the Ethereum world, but just recently launched on Solana. So I'm very excited to have him on, chat a little bit about that. Sergej, thanks so much for joining us.
Hi, everyone. It's a pleasure to be here.
So I'll just start with, 1inch was popularized on Ethereum. It's kind of an OG DeFi protocol, some might argue. And I think my core interest in this is, Ethereum is not, at least at the layer one level, not quite as performant as Solana. There's 12-second-ish block times compared to 400 millisecond block times. And DEX aggregation, where you kind of take user swaps and route them through different DEXs or liquidity venues to try to get the best possible price for the user, is a very time-sensitive, very performance-forward game. So I'm just curious, what has been the challenge, or what made you think that 1inch could sort of leave Ethereum land and come to Solana and really be able to compete with the aggregators over in the SVM world?
So we actually launched kind of aggregator of aggregators on Solana. So we call it intent by swap protocol. We came to it back in 2022. This thing allows us to create kind of a market where users can announce own orders, and these orders are sold by the protocol to market makers. It's like P2P swap. So under the hood, the market makers and arbitrage traders, they can use whatever they want. They can use own liquidity. They can use kind of arbitrage approach and use DEXs and use the aggregators who aggregate DEXs. So this is what we launched on Solana because it was the simplest thing what we could easily deploy on Solana, and what would give us huge impact in terms of also the efficiency of the swap itself, execution of the swap. Because the beauty of Solana is the fast block time, and our protocol sell the user order to market makers, arbitrage trader by using Dutch auction. And Dutch auction follow the liquidity curve of the chain, and it goes at the end down for the full amount. So the more you exchange, the more price impact you have, and we mitigate it with our protocol. So and every block we have little bit bump of the price down, so the price is getting better for the market maker, arbitrage trader, and they compete between each other to be the first to fill. So even if they make $10 cents, they will arbitrage it. So this kind of thing what we released. Of course, we will continue with next release for the cross-chain swaps. So we allow then everyone from Ethereum or EVM compatible chains what we support to jump into Solana and back. And also for infrastructure kind of partners, we plan also to introduce aggregator, what you know from Jupiter. Jupiter is like this classic way of aggregator, what we did already 2020 and 2019 as well. They just combine all liquidity sources into one single transaction, what you have to execute, and then you can also face the math extraction. Yeah, so you get sandwich, you get front run, And this issue actually we mitigated also before intent-based protocol, so you're protected from math by design. And it's also something new in Solana. No one did it before. And one more thing, what we did was what was very important for us. You don't have to trust us. You can verify the smart contract because it's public available. It's under open source, under MIT license. So if you want to build something on top of it, you can do it. And also very important, you can verify it. A lot of smart contracts like on Jupyter are not verified. And I personally have fear to swap on such smart contracts because you'll never know. Maybe like North Korean hacker can hack a developer notebook and then they extract the amount of money what goes through the smart contracts. And for us it's important to keep kind of high standards, what we know from EVM compatible chains, also on Solana. These things we released recently, and of course, like we are really happy to work with the Solana community. I'm also like using swapping on Solana. It's insane fast and now also safe, I would say.
Yeah, I think there's more to add there on the open source, closed source question that I want to get into a little later, but maybe to just nail down a little bit here, like as you're building this product for Solana, was there anything that was uniquely difficult, or did you find it hard after being in EVM land, like to keep up with just the massive amount of data and usage and demand and spam and everything that goes on the Solana L1?
So it was challenging for us because we are EVM native people. So we learned like how to develop on Ethereum blockchain. Architecture is differently. Our EVM compatible chain intent-based swap protocol is kind of off-chain based on signing messages and sharing it through different servers to the resolvers, to the market makers. At Solana, we came to the point that actually you cannot do like off-chain signing and sharing the order with everyone. It doesn't work because you need then a deposit in an account in Solana. So we had really to learn to walk, again on Solana. We had to rethink everything, to change also the architecture. And actually, it was really good because we introduced something what is more decentralized than we had before. So you have to announce the order on chain. It costs less than $1. And it's more decentralized approach than what we did before. Like we are sharing on EVM compatible chains the orders through different servers to the market makers. And on Solana, it's fully decentralized. You announce it on chain, costs under $1. And everyone can feel it who participate in the 1inch ecosystem as an arbitrage trader market maker.
Solana's been hot lately, but you can truly never fade Bitcoin. Are you a Solana user who wants to get exposure to Bitcoin? Mint zenBTC to get that Bitcoin exposure with yield and some rewards to boot. zenBTC is the first application launched on Zenrock, a permissionless decentralized custody network backed by One Roundtable partners, 10T, Maven 11, and Spartan. Live on Jupyter, ROC is the native token for transactions within the Zenrock ecosystem and secures Zenrock's decentralized custody network. zenBTC is secured by Zenrock Decentralized Custody, and it ensures that Bitcoin holders can securely and seamlessly earn yield on their favorite chain, like Solana. Visit zenbtc.io to learn about earning yield with Bitcoin on Solana.
Just to clarify, like, does this end with, as you've tested your product against other DEX aggregators or meta DEX aggregators that are out there now, like, are you able to achieve better prices than competitors on Solana?
You need to see it as an engine. So, and this engine needs to get the full speed. And full speed it will get as soon as we have more market makers on board. There are already some, like I think like one or two more market makers, arbitrage traders joined. Already start solving additionally to our own resolver, because we need to maintain kind of safety and fairness. So just imagine if all the market makers just like decide to speak with each other and to wait maybe until the price dumps for the user, then it will be bad. So that's why we have a team here who is specialized for this and make sure that they fill as soon as possible to fill. So for small amounts, it's almost the same execution like Jupiter. Under the hood, some of the market makers are using also Jupiter as well, because we didn't release our classic swap similar to Jupiter. We didn't release yet. It's still in working. As soon as we have more market makers who all work with On Liquidity, like Wintermute, GSR, and maybe Cumberland as well. So they hedge on centralized exchanges, they hedge on other networks, and work with On Liquidity and settle directly. So small amounts is like almost the same as Jupiter, maybe a little bit more expensive, but you get web protection by design. Yeah, you don't have to use a special RPC endpoint and bribe G2 or someone else to protect you from sandwich attacks. So it's already by design. For bigger amounts, we have really nice thing. We reduce the price impact. So the architecture works very well also on EVM compatible chains, layer 2s. And we have seen cases where someone exchanged 12 million USDT to WTH, to Ethereum. And this guy got $135,000 more. This is a brand new 911, what they just got for free by using our tech. So otherwise they had to do the transaction by themselves, and they would just face the market rate. Since we sell from spot price to the market rate, so we reduce the price impact. So they got actually more than they should normally. So and nowadays we show it also in the interface. You get a banner with confetti, and it's like, hey, you got like 1K more than you expected. So this we introduced also. It's a new thing for Solana as well. So we reduce the price impact, protect people from the math, and you can get more. You can just mention like 911 for free, just because you use the right tool what empowers you to act like a pro.
So you're talking about like onboarding market makers. Have you been able to onboard like SolFi and Obrick and some of these new kind of proprietary dexes that have come out?
So the market makers like arbitrage and arbitrage traders, that does arbitrage any liquidity what's out there. We are speaking. We try also to speak right now with Jupiter that they maybe act as a resolver. We call them like arbitrage trader. So they settle against own protocol and also all those protocols what they aggregate. So we want to abstract us a little bit on the to the level where we take care about the user. And the infrastructure there, this is already well covered, and crowded, I would say. Like Jupyter is there and some other who already kind of do aggregation, and we actually want to solve the problems of the user and don't want to compete with someone who is doing this very well. For us, of course, for reset, we will introduce similar to Jupyter because we have our unique algorithm, what is also under patent in US and some other countries. Just to also for us to improve the settlement and introduce better rates for the user. So yeah, anyone is welcome. So like we are friends with everyone. We are friends also with Uniswap. And if someone wants to arbitrage, to settle, to provide more liquidity, you're very welcome to work with us.
I bring up these dexes because it's been an interesting emerging trend where SolFi was revealed to be built by Ellipsis Labs. It's this DEX that makes up like more than half maybe of Sol USD swaps, Sol USDC swaps on Jupiter and maybe even on Solana in general. And it basically is just this in-house designed DEX, and some are pointing to this like the rise of prop dexes, basically where you don't open source the code, but you like use maybe more TradFi sophisticated market making strategies, and you just get much better prices than what you can achieve with like an AMM or something like that. Have you been following this, first of all, and then secondly, I guess what's your take as someone who comes from EVM land and this focus on open source and all that kind of thing?
So I'm very careful with what I am interact in crypto, so you can be easily drained. We have seen cases where a developer gets like attacked by North Koreans, for example, what happened with Bybit, right? So Bybit used Gnosis Safe multi-sig, and it's a small team. I'm also angel investor of Gnosis Safe. It's a small team. They don't have even ISO certification. What makes sure that you keep specific industry standards of security and so on. And the hackers are very smart. They were able to inject something, especially for Bybit, and extracted 1.4 billion US dollars. So, and when you interact with a smart contract, what is not open source, like at least like not open for reading, yeah, you cannot be sure that everything is good there. Like maybe they have a backdoor, maybe a developer gets attacked, and the hackers get access to the smart contract and extract the whole value. You can lose everything. Yeah, so I'm very careful about that, and I suggest to everyone just to understand with what you interact. So the second thing is about centralized approach. Like, where's the difference? Why is someone using Solana blockchain and work with a closed source smart contracts? Like, where's the difference to a centralized exchange? And these people who are offering like centralized approach, there's also from the regulatory point of view, like highly critical view, I would say, because like if they control everything and it's not like a P2P marketplace or a protocol what allows you to by yourself to aggregate, then it's more centralized thing what needs to also be regulated because it's theoretically custody service. Yeah. So there are a lot of kind of, for me, red flags. Like I'm from 2017, I think, in crypto, especially Ethereum. Yeah, I try to understand. Okay, with what I interact. Of course, we have an EVM space as well. Like for example, across. It's also more or less centralized thing. You just give your funds away and you hope that you get back on the other chain something else. So what do you expect? Or relays also settlements immediately. But it's like centralized thing. It's like changeally, you give your money away and you hope that they will pay you back and will not ask for additional, security checks or something, So that's why we are building fully non-custody and fully atomic protocols with simple complexity. Because, if something can fail, it will fail. So we try to build something what cannot fail, or there's no way to fail, and you can only achieve it by using specific standards. And our value proposition is non-custody and atomic execution, also for cross-chain swaps.
I want to ask, on this show, we're very Solana focused. We will talk about what's going on in the Solana DEX world, but we don't often get a broader view quite as much. So I am curious, just as someone who worked with lots of EVM DEXs and liquidity venues over the years, like, is there anything interesting or noteworthy that you found when you were integrating Solana DEXs of how they work differently, or just anything you noticed while kind of having to build out the SVM side?
What I noticed on Solana is that Jito makes a lot of money. They get bribed for protecting people from math. And when you interact with the DEX, they are not protected from math by design. And actually, we want to change this as well. So we are working on. We have a protocol, Liquidity protocol. I don't know if you have seen in 2020 we released Muniswap, and then one is Liquidity protocol with $2 billion dollars of TVL. We performed 4 times better than Uniswap in fees. If you have this, if you look into the generated fees based on the TVL, we have actually built 2020 already math protected DEX, and I think we will deploy it also on Solana and some other blockchains as well. Because the thing is, yours liquidity, we're also liquidity provider. We have a good portfolio, what we also put into different liquidity protocols. We generate some passive income. And it's highly terrible when you sit in Uniswap and someone do just-in-time liquidity providing and get all the fees from the trade, and you don't get almost anything. So, and also for the infrastructure projects like arbitrage traders, for example, they need to use Jito or other providers who protect them from math to interact with the DEX. It's also kind of paying for these people, and it's not efficient to pay someone who just tried like to keep your transaction private and not share it with everyone, so no one can extract. We can extract this value from Jito and put into liquidity provider hands. So liquidity provider can actually get this money by just providing liquidity in a protocol what is protected from F by design. Yeah. We were too early, I would say, in 2020 with the protocol. No one understood. Less people understood. We got huge amount of liquidity. We changed our priorities because we had not enough hands, I would say, to this time. We had to focus on swaps. But nowadays we are one of 67 people around the globe, growing, have nice structure already, office and software development company office in Dubai. And I think we will also deploy something like that on Solana. So to push also a little bit, the borders and also the competition space. So people maybe come with new innovations and try to bring something better than we have.
I think that comes back to where I started this conversation, though, is like MEV, native MEV protection on Ethereum, I would think would look much differently from Solana, given that there's a mempool, given that the block times are, quite a bit longer. So, like, has it been challenging? Do you think that you can build out that product sufficiently on Solana? Because I think sandwiching is a really tough nut to crack that nobody that I've seen yet has like the Panacea solution to. So I don't know. Do you think that this MEV Protect thing can transfer from Ethereum to Solana and still kind of work well enough for users to want it?
Oh, it's possible. It's easy actually, especially for the DEX. For example, when someone swap in one direction, so normally on a DEX you have arbitrage opportunity in the same block in the reverse direction. Yeah. So there are some hacks, I would say. So what we did with the Munis of One-ish liquidity protocol is when someone swap in one direction, the arbitrage opportunity, the protocol starts to sell the arbitrage opportunity in time on auction. So it's not possible to move the liquidity, the price in one direction and sandwich a transaction from a user. So they lose on the price impact. And then move back in the same block or in the next blocks the liquidity back. The attacker would lose a lot of money because the mechanism with the auction, they need time to move it back. Yeah, so we can set, depends on the chain, we need to adjust. For Solana, maybe we will set maybe 50 seconds, 10 seconds. So we sell the arbitrage opportunity back. So we need to find the right settings just for the Solana. Also in just-in-time liquidity providing. If someone provides liquidity, they should not withdraw in the same block. Yeah, so we can just eliminate also just-in-time liquidity providing attack for the liquidity providers. And such small hacks helps, and less people really use this. We actually came with this already 2020, published a white paper, also implementation, and I'm really wondering why no one took care about that. I don't know.
Without having all the technical documentation in front of us and stuff, it's a little hard to dive into all of it. But I think there's something there where the thing needs to not just be you could make something very sandwich resistant, but if it sacrifices the performance or some other aspect of Solana that users demand, then it won't catch on. So I don't know, this is a random example, but Ellipsis, the developer of SolFi, built a sandwich resistant AMM on Solana. They offered it to Pump Fund for Pump Fund's AMM, and Pump Fund said, no, thank you, we'll build our own AMM. And lots of people are still using Pump Fund. They don't necessarily mind as much if they're getting sandwich attacked.
No one cares.
Yes. Validators obviously love Jito because the MEV rewards are really good. And I think the market sort of rewards Jito for the tech that it's built in that way. So I don't know, again, without all the documentation in front of us, it's a little like he said, she said. But is there a performance aspect, or like the market basically doesn't demand these things aspect that could affect this sandwich resistant trading idea?
Yes, there are some impacts, of course. You have always two sides of middle, right? So what helps on Solana is the fast block time. So the arbitrage opportunity after price moves, the reverse arbitrage opportunity is sold in time. And in Solana, you can really set maybe for 2 seconds. You can set for 3 seconds. What makes sense? You need to run background tests to find it out. So on Ethereum, we had like I think 2 blocks. We gave the opportunity to buy back. So the thing is, sometimes you have huge trades coming, and then they moved the whole price of the blockchain down. For example, maybe someone would like sell a lot of SOL, yeah. And arbitrage traders, they buy on centralized exchange other networks and try to arbitrage and move it back to the Solana chain, for example, to arbitrage, yeah. So, and the idea is to sell it just in time, a little like in small time, but still selling in time to get more rewards for the user. But again, it's the price is moving not that fast as you have normally in the AMM. Of course, there are side effects, I would say, but anyway, we have seen the huge dump. It was, let me think, it was 2021. It was huge dump on the market, 30 to 40% just dumped of the whole crypto. We had $2 billion US dollars and as liquidity in our liquidity protocol. And we have seen huge earnings for the liquidity providers because the pool, like the MM, it doesn't know what is the current price out there. But based on specific interactions, for example, someone exchanged a lot at once, means price moving. So we guess kind of, the protocol guess that the price moves. And when the price moves in the reverse direction, we sell it in time. And then we had one more nice thing. Based on the price impact, so if the if someone moved the price by, I don't know, with the price impact of 10%, then we charge additionally fees, 10% of this what they exchanged to extract more value, because they have any way to move it. If the price outside changed, they have to move the price. So we collected actually more liquidity and more earnings for the liquidity providers, and this caused additionally better earnings for liquidity provider. And they're like, okay, I get more here, then I put more liquidity, and more liquidity gives better rates, more volume. More volume gives more fees. So this kind of, like a cycle, and it's like a little bit chicken egg. With no liquidity, you have no volume, yeah, no users. But if you get liquidity, then you get volume, and when you have volume, you get fees, and when you have fees, you get more volume from the users. It's kind of cool thing, but it's difficult to bootstrap. Yeah.
Mm-hmm. Solana's been hot lately, but you can truly never fade Bitcoin. Are you a Solana user who wants to get exposure to Bitcoin? Mint zenBTC to get that Bitcoin exposure with yield and some rewards to boot. zenBTC is the first application launched on Zenrock, a permissionless decentralized custody network backed by One Roundtable partners, 10T, Maven 11, and Spartan. Live on Jupyter, ROC is the native token for transactions within the Zenrock ecosystem and secures Zenrock's decentralized custody network. zenBTC is secured by Zenrock Decentralized Custody, and it ensures that Bitcoin holders can securely and seamlessly earn yield on their favorite chain, like Solana. Visit zenbtc.io to learn about earning yield with Bitcoin on Solana.
One thing I wanted to ask is about scaling an aggregator business. Something that I've maybe commented on recently here is it seems like there's all of these new aggregators or routers or basically venues where you can swap and get access to liquidity across multiple dexes on Solana. Like a number of them have launched or are launching in the past, 6 months. And I think one of the reasons for that is it's just a better user experience, like than going and trading natively on a DEX where you might not get the best price. You might have to go to a different DEX, something like that. what comes next? Because I think there's different approaches here. Jupiter is the big DEX aggregator in Solana, obviously, and they're sort of trying to become crypto's everything app. They're building like a layer one like SVM thing called JupeNet that's going to have cross chain swaps. And I don't know, they bought like Drip, which is a sort of NFT social media thing that they have their hands in lots of different bowls. 1inch. The way I've looked at you guys is you've stuck more narrowly in that lane of the swap trading product. So I don't know, 5 years in to building this business, like how do you think about aggregators and the way that they scale over time?
Yeah, Jupiter is delivering like beasts, I would say. They have a lot of funds. I think they earned a lot of money recently on Solana, and it's very interesting. They start to buy teams. Like I didn't see on the EVM compatible chains someone who's that aggressive and buying also teams. It was an interesting approach. I think you will also go this direction. So we are looking to raise once again. The last raise was 21. So we need a little bit more support from backers in terms of how to grow further. The idea is to buy smaller teams to get the talents very fast on board, specifically for the different chains. So we plan also to go to Sui, to Aptos, to other blockchains, also integrate Bitcoin as well, Christian swaps. There's room to grow. So actually, we are competing, like we are DeFi space, Web3 space. We are competing with the crypto space, and crypto spaces are decentralized exchanges. And centralized exchanges are not efficient because they are closed. So you need to deposit funds into this centralized exchange, and the liquidity becomes isolated. But in our space, we are very open. So Jupiter can aggregate among all the liquidity sources on one chain. So they are not limited for specific closed order book, right? So the same as us. We even work with Jupiter, Under the hood, it can be that Jupiter is used for swapping, yeah? Of course, there's some limitations in terms of like, on Solana, you can have like in a smart contract, you can have only a specific amount of calls with what you interact. And Ethereum, we have more, but we can work with this because of the fast block time. We can also create bundles and then have multiple bundles for each block and do partial fills. There's also one thing what we came and introduced also in the EVM space with the partial fills, similar to limit aura. Like you can have limit aura and it can be just filled fully. Yeah, this was like at the beginning with CRX, I think. And we introduced also partial fill. So someone would like to get one part of the limit order. We allowed it, and also for the intent-based swaps now, like there are market makers that can just have slices of the order. Yeah, at the end, the user wants to execute it. Yeah, it doesn't matter how under the hood. So in general, there's room to grow. Also, I share like from Jupiter cross-chain. Yeah, makes totally sense. They want to open the gates also to people who are on other chains to jump into to the ecosystem of Jupiter. Makes totally sense. And they're delivering like this. They have every time new product. It's interesting, but I would wish more transparency in terms of like show the open source code or just at least open reading code, so I can at least understand what if I'm interacting.
Is 1inch profitable, by the way?
So we are swimming around zero, I would say. We don't have interface fees, so it's a little bit difficult because we have foundation, we have DAO, then everyone needs to decide on that, and no one wants to extract right now from the user. But what we at 1inch Labs, what we do business integrations. So we work with all the wallets. So you said like everyone offers swaps. But under the hood, most of the products, 1inch is integrated. MetaMask, Trust Wallet, Binance Web3 Wallet, OKX Web3 Wallet, Coinbase Web3 Wallet. So Revolut Web3 Wallet, we're speaking right now with them, so they get the integration of 1inch APIs. So we have actually built in the last couple of years a software service platform where any developer can get an API key and they can build own application. If if the application need to do Web3 calls to Solana nodes or to EVM compatible chains or layer 2s, they can use our system. It's highly scalable. It's also kind of aggregator of providers. So you have Infura, you have Alchemy, and some other also who offer Solana providers. Everyone has own terms, and own features. Someone offer archive nodes, cheap, someone more expensive, but we can aggregate it at 1inch and we do it. So actually, I built my first aggregator already to 2011. I did aggregation of telecommunication, SMS. So I had also a lot of providers and just combine them together and give just best user experience. And we offer it now here at 1inch as well with all the APIs what normally a developer need, or maybe business partner, for example, also portfolio. We plan also to introduce kind of portfolio management a tool where you can see, okay, what is your P&L also for Solana. So my people need a little bit of time to learn to work, to run, and to fly on Solana in terms of working with the data. There's a lot of room to grow, to improve, to build.
So it sounds like, at least on the revenue side of the company, like the way you scale up is not necessarily in the Jupiter sense of being like, hey, come interact with our interface, download our app, like do all these things on Jupiter, and we're becoming the everything app for crypto. It's more other places using 1inch's tech under the hood is this the path forward, I guess, for 1inch.
It's both. So we focus to sell B2B, like to sell our APIs, to be integrated. For the case if someone appears who is much better than us in maybe the application, the user interface and the wallet itself, we are still good. We are still integrated in the applications. It makes a lot of sense. It's collaboration approach. Collaboration is the key for success from our point of view, because you don't have to compete with someone. You can just benefit from each other.
I want to ask too. My understanding is Solana, 1inch is launched swaps on Solana, but cross chain with Solana on 1inch is coming soon as well, but it not quite yet available. At least when I tried using the product. We've talked about cross chain on this show before, and maybe some of the limitations around it. I know Kyle Samani, for instance, came on a number of months ago and was saying like, we can do cross-chain, but it's less capital efficient. You get wider spreads, slower liquidations for DeFi, all these things. And just personally, like as a Solana user, I feel like most of the things I want to interact with on chain exist on Solana. I can buy Bitcoin now on Solana, or get exposure to the price of Bitcoin, I guess, to be more precise. The only times I do cross-chain are like I needed to claim my Kaido airdrop and it was a huge pain and I had to buy ETH and all these things. So I don't know, like sell me on cross-chain. Like why do we need a future where we're moving assets between blockchains when there's like, even if it's possible to do so securely, there might just be performance trade-offs where having everything on globally shared state in an L1 is maybe better.
So we need cross-chain to offer seamless experience similar to centralized exchanges. So in centralized exchange, you don't care about the network, right? So you just interact, like you buy Bitcoin, you sell Bitcoin, you buy Sol, you buy Trump token, you don't care. And then when you do withdrawal, you need just to care where you withdraw this. So I want to have same user experience, but with the value proposition of atomic execution and non-custody approach. So you own the assets. You don't believe anyone, and you don't need to trust anyone while I'm doing that. So in terms of like cross-chain technology, we are really far enough to offer the seamless experience. When you swap at 1inch between the different EVM compatible chains and layer 2s, you are most likely under 2 minutes for the swap. And it's not a bridge, It's not like you move the assets from one blockchain to another. You sell your assets in one chain, and you get your assets on the other chain. So someone just trade with you in P2P Mera. This is the approach what actually no one did before. So of course you have little bit spread. It depends on the liquidity and also the how I explained. It's like an engine, and you need enough market makers, arbitrage traders who compete between each other. But for this, you need volume. So it's like chicken egg a little bit, and we have already volume, Solana volume, and also cross-chain volume for different chains. It works already very well. The thing is, when you sell, for example, Trump token on Solana, and you want Ethereum on Ethereum blockchain, so it's like for the market makers, arbitrage trader, they just take your Trump, sell it against something stable, maybe USDC, or even maybe Ethereum, bridged Ethereum, or synth of Ethereum, and then they do the reverse trade on the other chain and buy Ethereum, for something what stable, maybe USDC. USDC actually offer the native bridge, right? So they can rebalance easily without losing a lot of money. But it's like magic under the hood, what users should not care about, yeah. And it works. It works very well. So you just sell on Trump on Solana, and then you get Ethereum, because they just do reverse trade and rebalance afterwards. Yeah, it works very well.
But like, I still don't know. To compete with centralized exchange experience, you would need like a faster swap than what cross-chain swaps can necessarily offer. So, right?
Wait a sec. But if you do deposit, exchange, and withdraw, is much longer than just do a swap on 1 inch, and under 2 minutes you get it executed, and you don't have to interact more than one time. It's the thing. So like, it depends how it's relatively, relative to how you see it. I see it like, okay, if I want to exchange something on Binance, I need to do the deposit, exchange, and then I have to withdraw, and the withdrawal can like take maybe up to 24 hours, right? So because I have to review it. So, and here it's like atomical execution under 2 minutes, I would say.
I don't know if I'm fully convinced. I feel like in my own crypto comings and goings, like I can do anything I want to do on Solana, and I rarely go to other chains unless I want to just mess around with what else is out there. I think probably the best pitch for cross chain is just that maybe Solana isn't the end game for blockchains. Maybe I don't know, through this new like Fire Dancer dev chain becomes like the new Solana, and then everyone wants to do business there. Mega ETH, like maybe there's another chain that just becomes the chain, and so you need kind of to be able to move your assets around eventually. But
I see it differently in terms of like, for example, if you have a portfolio, yeah, and you would like to buy a Uni token, and Uni token, I think it's not on Solana. Even if it would be on Solana, most of the liquidity is right now maybe on Unichain, right? So they actually did vampire attack recently on Ethereum with the liquidity incentives. So the thing is, if you want to have Uni token in your portfolio, you need to swap into the most liquid chain potentially, yeah. So you have to just sell something on Solana, maybe use USDC, and you buy Uni on Uni chain, and you get really good price with low impact price impact.
I guess I'll just conclude by like, what's next for 1inch? You've launched the Solana integration. We know that maybe cross chain with Solana is coming, but what plans should folks look for down the road from you all?
So we are working very hard on the cross-chain solution. So I hope in next 1.5 months we can deliver. After the cross-chain, we will introduce the classic swap, what you see on Jupiter, so we can also fulfill the need of our arbitrage traders. And after that, we will go for another chain. So, and offer. I hope very soon also Bitcoin, so you can buy from Solana. With any token you have, with any stable what you have on Solana, you can just buy real Bitcoin, yeah, and hold it in our non-custody wallet. What will support also multiple chains additionally to Solana. That's the plan for the next future. Like 1 year in our space is like 10 years in the traditional. So I cannot plan more than 1 or 2 years, it doesn't work at all. It changed everything.
Yes. Much humility is needed in crypto. But best of luck. And Sergej, really appreciate you taking the time to come on Lightspeed.
Yeah, thank you very much. It was a pleasure.
Thanks everyone for listening. Please like, 5-star, wherever you get your podcasts, subscribe, follow us on Twitter for the latest updates. If you enjoyed this show, please show it to a friend, and we will see you all again very soon.